Hello, Jim here. I typically sell options on companies I want to own or ETFs I want to own. There are a few exceptions. There's a few ETFs I will sell options on that I don't necessarily want to own the underlying ETF. Today I want to talk about one in particular, IWM. And at the very end of the video, I'm going to share with you some of my trades and why I chose to use IWM versus SPY. So stay tuned. I think you're really going to enjoy what I have for you. Let's go ahead and jump right in. I typically like to give a quick market update. The market's been up quite a bit yesterday, and I believe it's up again today, at least last time I checked. And mostly because the Fed has alluded to potentially doing 3 rate cuts next year. I was thinking they were going to do 2 rate cuts, but they actually suggested 3, and it looks like maybe as early as March. I actually would prefer them not to decrease them too much. I'd prefer that they stick to 2 rate cuts versus 3 2/4 point rate cuts. But again, these are the same people who, brought interest rates almost down to 0. I do think, 4% or higher, maybe 4.5%, is a better rate, especially for retirees, being able to earn money on your cash that's sitting in your accounts and, having these higher treasury rates and money market rates. It's been really beneficial to retirees and to a lot of people that might have a lot of cash on the side. Also wanted to mention, I do think we're going to maybe have a correction, or the market may go down towards the end of January. The government's going to pick up again the federal budget. I believe it's January 19th, 18th, something like that. I think they're going to start talking about that all over again. They just did a stopgap type deal back in, I think it was last month. So that's all going to start up again. So I don't know if all the fear related to a shutdown may cause some issues, but it's something to keep an eye out for. And as we get closer and closer to the election, typically an election year is a good year for the markets. So I think we may get a little bit of a correction earlier in the year versus later, especially related to it being a presidential election year. So that being said, let's jump right in. Now, like I mentioned in my introduction, I looked at both SPY and IWM. I wanted a way to make some extra income in my accounts by selling particular ETFs that had plenty of volume, plenty of open interest, and lots of expirations. And I found both do. SPY may actually have more, and I think it's performed better for a longer period of time. But I personally chose IWM, and it was primarily because the price was easier to deal with. It was in the 160, 170 range for the longest time. So that compared to, the S&P being, or SPY being, I believe it's like 460, 470. It was a little bit easier on the budget to stick with IWM. And I found that the premium for IWM was quite good, especially on the put side. And it's even fairly good on the call side. So I chose primarily just to use IWM. Now, I may change that going forward next year. There are definitely more volume with SPY, and especially if SPY comes down a certain amount. I felt like SPY was a little bit too pricey, but long term, it's done a bit better than IWM. They kind of coincide, and I'll probably continue to do IWM. So I've done mostly vertical put credit spreads in IWM, and I've also done iron condors, and I'll share some of those trades at the end of this video. I'll talk about why I chose the deltas that I chose. I'll talk about how much I made with different trades, and I'll show you, I kind of started this process this year, and I kind of started doing more and more, and we did kind of have a scare. I believe in October and the beginning of November, IWM got really low. I believe it got below 160. So I had a lot of those vertical put credit spreads that were literally in the money at that time. Now it's actually shot through the roof. I believe IWM is just shy of 200. It might be like 197 or 196 today. So now it's it coincides more with SPY. I think SPY hasn't gone up as much in the last couple of days. So it's like IWM's recovered, and that's another reason why I might look at SPY and start trading with it some, especially in this coming year, 2024. I'd be curious, what are your thoughts? Do you trade SPY? Do you trade IWM? Which one do you prefer? Please share with me, in the comments. And I typically answer all the comments. I'm just curious to what you think. What do you prefer? Or which one do you prefer? Or do you even trade in either one of them? So again, the main reason I trade in both of these is I don't really want to own them. I don't need to own them. They're not my favorites. There's other ETFs that I like a little bit better, especially better than IWM. That may not be the case with SPY. If I start trading with it, I might be more interested in owning it and then also doing covered calls. And maybe even with IWM, that's something I started looking at more recently. IWM has got some pretty good covered call premium too. So I might actually start doing it more in the wheel going forward. So maybe I'll change that of not wanting to own it. Maybe I will go ahead and own maybe a couple hundred shares. And then, like I said earlier, I started originally just doing put credit spreads. Now, more recently, I've done iron condors, and I found them to be very successful. And typically, if you're not familiar with an iron condor, it's a vertical put credit spread paired with a call credit spread. So you're kind of saying you don't think it'll go above this specific point or go below this specific point. And what I found is I can take less risk. I can do a much lower delta and still make pretty good premium. And the delta that I picked for doing these was right around a 12 delta. And in both instances, and I actually think I did 3 iron condors, I believe I closed half of one and let the call expire. And then the other 2, I've got one expiring literally tomorrow. The other 2 will expire, and I'm not looking to roll them. In Schwab, it's a little bit more difficult to roll. So I've been primarily looking at them as, a shorter DTE and letting them expire versus trying to roll them. And again, one of the main reasons is compared to a lot of stocks and a lot of other ETFs, they have so many more expirations, so many more. I mean, SPY has daily, so does IWM, but nowhere near as much as SPY. And even the dailies have lots of volume. So I know there's a lot of people out there trading them. And I believe the people who are trading the weeklies also are trading SPY and IWM quite a bit in the weeklies. And having that kind of liquidity, volume, and open interest really gives you a lot of flexibility. It allows you to do shorter durations. But remember, for me, I still prefer like a 45 DTE, even with IWM and possibly SPY. The main reason is I feel like I can take less risk. The shorter the DTE or the fewer the DTE, the higher you typically have to go with a ETF stock price or, with its strike price. To give you for instance, with IWM, if you go a week out, and it's say 170, you might have to trade around the 165 range. If you go out to 145, you could probably trade in the 160, and maybe even lower range, depending on where where IWM is at that time. And the same thing with SPW. So I still prefer going a little farther out, like 45 days. I used to go even farther out than 90 days, but I'm trying to limit anything over 90 days. I'm trying to make that my max and my average be more like 45 days. And that seems to be working really well for me. Now, guidelines, when I feel like you can take a little bit more risk working with these, not a whole lot more risk. But in the iron condors that I mentioned a few minutes ago, I actually took really low risk. I think I could have made a lot more if I had just gone from like a 12 delta to a 15 delta. So that's something else I'm exploring. I have found that with ETFs in general, you can go with a little bit of a higher risk. So for me, I keep saying for call options, I do like a 20, 25 delta. I may go up as high as a 30 delta or a 35 delta with both calls and puts. Now puts, if I don't want to own it, I've been doing more like a 15 put. But when I'm running the wheel, like I am in my new Fidelity IRA account, I will usually do around a 30 delta, and that's worked out pretty well. But I've been primarily doing it on bargain stocks, which, IWM and SPY aren't typically what you would call bargains. I do think IWM, when it got down to 160, it was kind of a bargain. So I probably should have been doing the wheel with it. But it's just the way I prefer to do it. And so my guidelines, which I share with all my memberships, I release a weekly spreadsheet where I manage my trades that are expiring over the next couple of weeks. And one of the sheets actually has my guidelines. It talks about my deltas, my expirations, what I look for in the companies, and all those details in one place that my members can use. And if you're curious about my memberships, details will be below. I've had a lot of people joining. I'm going to change them for the new year. I'm going to be actually adding in a group meeting where a lot of my higher tier people will be, once a week we'll be doing a group meeting, and then I'll share the recording of that meeting with my basic tier members, which is like, my basic tier is $10, my more expensive tier is $25. The difference though with the 25 compared to and it's called my Traders Club, is that I provide on a weekly basis like a 15-minute coaching call, and it takes a lot of time. But it's very worthwhile. I really enjoy talking with people and working with people one-on-one. And then if you're really new at trading options, it allows you to ask questions where you're not embarrassed, in front of other people who may be more seasoned traders. So at least it's worked out well. So take a look. You might find that it's worth your while to give it a try. And I do provide a 1 week free at the very beginning, and I'll continue to do that as long as people don't take advantage. But most people sign up. I have one or two each month that will try it for a week and won't sign up. But I like to give people flexibility. I like to keep it inexpensive so that it's not hard on the budget. So, I encourage you to take a look. It is probably worth your while. So that's the main piece I wanted to talk about. The fact that I like to use IWM, and I've done a lot of trades with IWM, probably close to 20 trades this year, maybe more like 25 trades. And I'm going to share some of those in the next part of the video. And I'll also talk about how much I earned in each of my different accounts where I am trading them. So stay tuned. Let's jump into the next part of the video. Okay, before jumping into my spreadsheet, I did want to talk a little bit about SPY and IWM. For those of you who are maybe not seasoned traders like myself, probably you may not even know what IWM is. IWM is an ETF that is the iShares Russell 2000 ETF. So it's just based on the Russell 2000, which is the 2000 largest companies, I believe. I don't know if it's largest companies, but it consists of over 2,000, well, not over 2,000, but 2,000 companies, whereas the S&P 500, SPY, is comprised of the 500 biggest companies. So you definitely have a lot more companies in IWM. So it's, in my mind, it doesn't move quite as much as SPY, which can be good and bad. SPY has been, you've earned a little bit more if you had been invested in it over the recent years. I did want to share how they compare. So the one on the top, the orange, is SPY and the blue is IWM. And you can see the craziness within the last couple of days. They both have shot up when the Fed made their announcements related to the three rate cuts. But you can see for the longest time, they kind of almost went hand in hand. More recently, they've, the SPY has done a lot better than IWM. And, that's, I think, narrowed a little bit, but SPY continues to do better. And a lot of that has to do with the biggest 8 companies, or I think they call them the Fantastic 7 or 8 or something along those lines. Companies like NVIDIA, Apple, Microsoft, Google, and so on, Tesla. Those companies have shot through the roof. If you remove just them and you remove the top 8 to 10 companies, the return would be like 30-40% below what it currently is, and probably matching with IWM a lot more than what you're seeing here. But I just kind of wanted to give you a visual of what they look like and that they do kind of almost move hand in hand. So now let's jump into my spreadsheet. And so this is, I'm not going to go over all these trades. I'm just going to talk about a few of them, but these are the trades I did. I did them in 3 different accounts, and I in my IRA with options, I started fairly near the beginning of the year, but only recently did I start doing them in the Roth and Simplified Employee Plan. And now I'm also doing them in my Fidelity IRA. But in these 3 accounts, this is the value at the beginning of the year. This is how much premium I brought in from doing just vertical put credit spreads or iron condors. So I brought in for my IRA with options, it's $24.52, which is nearly a 3% return on a yearly basis. And that's just for trading IWM. A little bit lower for my Roth. And again, I just started trading it more recently, so it probably would be closer to the 3%. And then my SEP account, I just recently started doing it. So, but I brought in $434. So between these 3, I brought in pretty close to $4,000, and I took very little risk. I was going to show you a few of these trades. So some of the first ones I did, and these are IWM, so typically strikes of 160, 150. So in the $160 range would be the short. So this first one I did 160, 150. I did it in January of 23. And I closed it early and I had a really good return on it. So like today, the market moved quite a bit and I was able to close it for a really good profit. So a yearly ROI was literally over 200. And similar situation for the other one I did on the 19th, which I started with like only running 2 of these at a time. Now I believe I have close to 4 running at the same time, or 6. I think 6 different contracts, typically 3 different positions. So this one I also closed and had a really good return. Here are just some other ones. Some of these are still open. They're multiple rolls. And then the other one I wanted to talk about, it expired. This was an iron condor. And I did it with a 12 Delta. And I went out, let's see, it was expiring on 8/18. I did it 6/14. So this, again, that, trying to keep it under 90 days. This definitely was under 90 days. It was closer to 60 days. And it was 169 was the short for the put and 207 for the call. And then the outers were 159 and 217. And I believe it never even got close to that. And I brought in some pretty good. This was the first time I tried the iron condor. So I only did it with 1 contract. That's why you're saying only 111. But it was nearly a 70% return. So my question here is a 12 Delta. If I had done a 15 Delta, I could have almost doubled this return. So that's one thing I'm learning as I go. I realize now I can do a little bit of a higher Delta and stay fairly safe. Here I did another iron condor back in August in my SEP account, and this one I closed half of it and kept the calls open and they expired. So half closed and half expired. Very similar to this one, a little bit lower though. This is when I believe is when IWM started to drop quite a bit. Again, late October, early November, I think it might have gotten below 160. So I made 177 on this. This was 2 contracts. And I made like a 61% yearly return. And again, it worked out really well with iron condors. I believe a lot safer than doing it with a stock, especially other than that short period when it got below 160 or to 160. And actually the last 2 days, it went from, I think, 175 to right now, I believe it might be 195 or 198. So it literally went up $20 in the last 2 or 3 days. So, but usually it doesn't move that much, and it's been fairly good trade to run, the iron condor. This is another vertical put credit spread. This is one I did. And and it's still open. It expires on 119, 161, 151. So you can see I made this 11.7, so it was pretty close to that low point. I believe it was right around 168 or something along those lines. And this one, I don't think ever, at that time, it started trading back in the close to 170, and it never really got in the money. But I brought in some really good cash, 257, and it's still open. So it's a 73.8% return, but I'll probably close it early. My guess is I can probably close it today. So the 73% return will probably be more like a 90% return. And here's another iron condor that I did. So I started with one, and in each case, I typically did a 12 delta, similar 162, 202 for the inner or the shorts, and 152 and 212 for the outers. What's really interesting is for the longest time, I was nowhere near the call side. Like this 202 is actually, this one is also still open. So this one actually has the risk of being in the money. And I believe, does it expire tomorrow? Yeah, it expires tomorrow. So I have to decide, do I want to do anything with the call? I'm hoping I don't need to do anything, but if I need to, I might close it. And again, this one's pretty accurate for the 50%. So again, I'm probably not taking enough risk with these. I'm very risk averse. But if I had done a 15 delta, this would probably be more like 340, 350. And then if we come down, here are just some comments or thoughts related to using IWM. Rolling produced lower returns. So again, closing it, not necessarily rolling it, is the better way to go. Closing early had bigger impact on return. Returns could be higher for multi-rolls if last trade is closed early. Again, one of my weaknesses is I need to be more active with closing these. I may go ahead and look at adding stop loss and stop gain trades so that it automatically closes. A lot of the members are doing that, and they're doing really well with it. So something I definitely can improve upon. Again, shorter DTE, actually, you do a lot better returns. And a lot of times by closing, like we were just talking, closing a little earlier can have a major impact. And then iron condors, maybe I'm taking too little risk and I need to take more risk. So these trades have worked out really well for me. I plan to continue to do them. And like I said, I'm also looking at SPY now that, if we go back to where it is today, it's not so undervalued like it used to be down over in this range. But so I'm also going to try a few SPY trades and see how they go. So I'd be curious, like I said earlier in this video, if you're doing SPY, I'd be curious to hear how it's going for you and what are your thoughts on doing IWM versus SPY. So as always, thanks for joining me, and look forward to seeing you next week.